Happy Friday, traders. This is Fawad Razak, the market analyst for City Index. Today is the 5th of January 2024. So we're coming up to the end of the first week, which has been quite interesting for the markets as we look at the charts. So the jobs report was kind of mixed. The headline number was stronger than expected, but the revisions to the previous 2 months data took some shine off the jobs report. And then we had the ISM PMI data, which came in weaker than expected, and that caused the dollar to go down and equity markets went up. So it's a reverse of the trend we've seen for the last 3 or 4 days. And as we end the week, it's risk on again. But let's see how the markets will close today's session, because the closing prices are always important and they'll give us a big clue in terms of what to expect for the next week. So I'm not going to bore you with the economic data here. You can have a look at it yourself if you need to. And the key takeaway point is that the markets have reacted in selling the dollar and bidding up equity prices. So the euro dollar has turned positive, finding support from around the 109 level and resistance from near 110 handle, which was previously resistance before it broke down at the beginning of this week. So we need to still go above the 110 handle to trigger a bullish signal for the euro dollar. But nevertheless, if we close positive today, then this should give us a positive indication insofar as the next week is concerned. We still need to move above 110.46. That's the opening price for this year. And move above that would be a clear signal that the bullish trend has resumed for the euro dollar. On the other hand, if we go back lower here and close the day below where the euro dollar has opened, then that would be bearish. And in that case, we could well see the euro dollar drift back to the 200-day moving average in the coming days at around 108.45-ish. Let's quickly look at bond yields. Yields have turned lower from right where you'd have expected, right? This level was previously support in early December before it gave way in the middle of the month. Previous support is now turning into resistance. We also have the 200-day moving average for the US 10-year. So far, it's indicating that yields should be heading further lower from here. And that should help to boost the price of gold and silver if we see weakness persist heading into the next week when we have US CPI, among other key data releases to look forward to. So looking at gold now, the precious metal has found some support from the 21-day exponential and previous. I've spoken about this level right here at around 2033-ish, which was support and resistance in the past. It's not a very clear level to be honest, but on the shorter term charts, you can see this level more cleanly. Anyway, the key point is that it has held for now. And from here, if gold can close in the positive, then the next level of resistance or potential resistance is seen at around 2075 to 2081, which was previously the old highs back in May of last year and August of 2020. Those are the key, the area between those two levels is key resistance. So watch out for potential weakness or profit taking around that level. Should we close above that level in the coming days, then that could pave the way for a move to the previous record high that was hit last month at 2146. In terms of the downside, a potential break below 2031 or thereabouts, especially on a daily closing basis, could pave the way for a move down to the next level of support seen at around 1996. The high of this doji candle that gave way back in the middle of December when the price of gold rallied sharply. That level remains exposed for a potential retest. So if it comes down to this level, I would expect to see a bounce of some sort. Below that, we have the 200-day moving average at around 1960-ish. That level could be the next potential support area to watch in the event gold goes down again. Silver, I spoke about silver in the previous video. I was expecting a bounce at around the shaded blue area, more precisely at above the at around the 2315 level, which was the high of this doji candle. It didn't bounce there. It instead went down a little bit deeper into the support area that I had highlighted in the previous video. But anyway, it's now bouncing back, and let's see if it closes the session above this shaded blue area. If it does, then this should potentially pave the way for more technical buying in the days ahead. Resistance in the short term is seen at around 23.65, the base of the this week's breakdown, where we also have the 200-day moving average coming into play as well. So a move above that level is needed to trigger a clean breakout. We also have this bearish trend line in place, or potential bearish trend line, because it's only been tested once or twice. So a move above that is going to be an additional bullish signal. On the downside, if support in this shaded blue area breaks down, then this level right here at 22.36 is the next potential support to watch. This converges with the high of this doji candle that was not retested once price broke above it, at least not on a daily basis in November. So there's a possibility that silver could still come back down to test this level before potentially resuming higher. But given today's price action and that of yesterday, when silver created a small doji candle, it looks like silver potentially has formed a short-term low. So I would be more inclined to lean on the bullish argument from here heading into the weekend and next week. So I'm expecting silver to climb higher. For more analysis, make sure to check out the news and analysis section at cityindex.com. Take care and have a lovely weekend.